the MF Corner, we put the spotlight on dividend yield funds. They are funds that pay out dividends regularly, or are these those funds that invest into high dividend yielding stocks? To discuss these dividend yield funds and whether they're a good investment bet, we've joined with us live as always Dhirendra Kumar, CEO of Value Research, who's here to demystify dividend yield funds and whether they should be a part of your portfolio. Dhirendra, what is the strategy behind these dividend yield funds? How do they work?
The popular understanding of dividend yield fund is that they give dividend frequently, which is completely wrong. I think there are quite a large number of dividend yield funds, and most of these funds focus on companies or invest in companies with higher dividend yield, and primarily they emphasize a portfolio with companies with superior cash flows and more credible payout history, and that itself makes the portfolio a little conservative. Most other equity funds are managed with a great focus on growth, but here is a set of companies which not necessarily come with great growth, but it is well compensated by greater stability. And these are the set of companies which have been able to withstand in this the market which is fumbling on every rise. These companies have actually withstood the whole volatility over the past 4-5 years far more, much better than the growth segment or the mid cap or even the large cap for that matter, where a big chunk gets into and out of favor very quickly.
Dhirendra, Birla Sun Life Dividend Yield Plus is a 5-star fund in this category. It has consistently performed well, but it has a concentration of mid and small cap stocks only. Would that be a concern for you?
No, not really, because here is a set of the overriding factor is high dividend yield. So even if it has mid-cap stocks, they are relatively larger mid-caps and credible payout history. That actually has translated into substantial outperformance in a market over the past 5 years or the past 3 years if you look at it, where the market hasn't gone much anywhere. But here is a fund which has been able to deliver nearly 18-19% return annualized in such a horrible market. So I think it has come in. I don't think I look at this particular segment, this particular mid-cap exposure of different kind of companies with apprehension.
Dhirendra, let's talk about the other dividend yield funds. That's the UTI dividend yield. It's given great returns since it's been launched back in 2005. What strategy did this fund follow? And it also has small exposure to debt. Has that helped the performance?
Exposure to debt is quite incidental mostly, and this fund often has debt but not of a sizable kind. And this fund has been very true to its label, and that it gets into stock which has credible dividend history, and it follows a formula that the dividend payout must be of a level which is pegged to the dividend payout available from the Sensex companies or the highest in the Sensex companies, somewhere around that. And that has come in very handy by not changing track. So there are occasions in the life of this fund or most of these funds that they don't find there is absolute dearth of such opportunity where the dividend yield is not high enough to justify a position in the portfolios, and that is a time when some of these funds have high cash exposure. Extraordinary dividend also sometimes find a place in the portfolio occasionally, but generally one must. It's a kind of portfolio where stocks which are out of favor find a place. That is when they have high dividend yield, and that has worked very nicely for both these funds.